afternoon and welcome to the Midlands Engine Green Finance panel, coming to you live from the Turbine Innovation Centre in Shire Oaks. We've got a really good panel this afternoon who are going to discuss the important subject of green finance. But before we do, I want to introduce myself. My name's Grant Peggy. I'm a director at the British Business Bank, responsible for the Midlands Engine Investment Fund, and I also sit on the operational board of the Midlands Engine. I just want to give you some context. The Chancellor announced yesterday that the UK's set out its plans to become the world's first net zero aligned financial centre. We've got commitments of $130 trillion to support the green finance agenda. So the UK is clearly a world leader in green finance, but we recognise that there's a need to do much more. And certainly from my perspective, and being very parochial, while we've made some important steps in supporting business make that transition to net zero, there is still much more to be done. So looking forward to the panel discussion this afternoon, what I'd like to do now is to introduce the other panel members and ask them to say a little bit about themselves and why they're here today. So I'll start by introducing Rohit Das, who works for the Environment Agency on green finance. Rohit.
Thank you. Hello, everyone. I'm Rohit. I work for the green finance team at the Environment Agency. And within the environment, for those of who you are not aware of the Environment Agency, we are a non-departmental public body sponsored by DEFRA. And within green finance team, we work on innovative funding and financing mechanisms to bring in more investments into climate adaptation and nature recovery. Thank you.
Thank you. I'll now hand over to Daniel. Daniel, tell us a little bit about yourself and the organisation you work for.
Thank you very much. Yes, I'm Daniel Rout. I work for the Woodland Trust, which is the UK's largest woodland conservation charity. We have 1,000 woods across the UK, stretching from Scotland up Loch Archaic down to Devon, across to Wales and Northern Ireland. These are free to access for the public. We have over 500,000 members and supporters, and we have over 13,000 schools within our Green Trees Schools network. Our three core values are to protect ancient woodland. It's one of our most biodiverse habitats in the UK and under threat from development and climate change. To restore trees, because a lot of our woodlands are in poor condition, and to create new woodlands. So we create woodlands with native trees. So they're UK sourced, UK and Ireland sourced and grown. And it's all about the right tree in the right place. Just to give you an idea of the scale. So since we were founded in 1972 by Kenneth Watkins, we planted 50 million trees. And I'd say a high proportion of those trees have been planted in the last 10 years. So we planted them with schools and community groups. So through our corporate sponsors, we give away 1 million trees to schools and community groups. We plant them with landowners, so trees on farms, hedgerows for shelter belts, soil erosion, things along those lines, very practical. National and local government. So we have a marquee project called the Northern Forest, which is a £500 million project, which is 30 years looking to plant 50 million trees. And more locally with governments, we've launched our Emergency Tree Fund, which is supporting local authorities deliver on their climate emergency declaration. So also with royal households, we've got the Queen's Green Canopy next year and the MOD. So you can see from that, we kind of plant with every section of society, as well as ages, groups, ethnicities. It's all about inclusiveness. The landscape's changed so much so quickly, even in the last 5-6 years. So politically, in 2019, you had the government declare net zero by 2050, which is enshrined in law, which was the first country to do so in the world, which is a really big commitment. We now have to deliver on that. What that means for woods and trees is we need to plant around 1.5 billion trees over that period, which is huge. To put into context, that's 30,000 hectares per year. And we're only planting roughly 6,000 hectares at the moment. So we really have to scale up our delivery. We also plant with the corporate world, and there's been lots of developments around the ESG agenda. So 5-6 years ago, it was quite philanthropic to support the environment. We've now noticed that it's embedded centrally in business strategy. And C-suite, chairman, CEOs, they're accountable to their shareholders, and their shareholders want to see that they're doing the right thing for the environment. So that's really positive. And again, across society, I mentioned the children. I've been up at Glasgow at COP26, and I got caught up in the Young People's March. and you can just hear the noise, the anger, I'd say, rightly so, and they want action. And these young kids are the ones that we're going to pass this crisis on to. So it's really important to include everybody across all demographics, all ages. To put into context what that means for the Woodland Trust, over the next 5 years, we have an ambition to plant 50 million more additional trees, which is huge, with all the groups that I've mentioned, but also collaboratively with all the different NGOs across the conservation sector. We can't do what we need to do at landscape scale in isolation. So it's really important, as part of the Lawton principles, that we create bigger, more joined up, more connected landscapes. It's integral to what we need to do. But it's much more about than just planting a tree. It's about creating those mosaic of habitats and really kind of joining in connectivity. So whether it's for flood risk reduction, whether it's for food security, water, all the things that we need to do that the climate and nature crisis threatens, basically. And then, like I mentioned earlier, the UK and Ireland sourced and grown trees. The reason we do that is around biosecurity. We don't want to import pests and diseases. You might have heard of ash dieback, which is a real worrying problem for our landscapes. We're set to lose millions of ash trees over the next 10, 15 years. And just to paint a picture, if you were to think of the Peak District, that's predominantly ash trees. So that landscape's going to completely change. So not only do we need to plant loads more trees, we need to protect the ones that we've got, which is really important. Before I talk about my role in the team at the Woodland Trust, I thought it'd be really interesting and pertinent to the debate around net zero and carbon, just to talk a little bit about the Woodland Carbon Code. So in the UK, we operate a high integrity kind of market in the woodland carbon. Basically, what that means, it's well regulated, it's a voluntary market which focuses on nature-based solutions. So it has to be high standards for the buyer, but also for the seller. So in terms of the seller, the Woodland Trust, all our woodland creation is driven by our conservation principles: right tree, right place. And what we do through the Woodland Carbon Code and our Woodland Carbon Offer is the additionality comes from the investment. So without that investment, we wouldn't be able to create extra woodlands. We register our sites through the code. There is an independent validation and verification process that takes in place. But what's really important, and I know there's a lot of talk around integrity around carbon markets, is these trees are put in perpetuity for the next 100 years, which is vital. So people know that they've invested in these trees are going to do what we need them to do, clean our air, etc. How that works is pending issuance units are then allocated on a market register to people that invested in them, and in time they turn into woodland carbon units. So that's kind of where we are from that. From a buyer's perspective, I think what's really important is it can't be greenwash. I know from the Woodland Trust perspective, we have a really rigid and robust due diligence process. So any company coming to us looking to invest and to offset, we need to know they've got a reduction strategy in place first. That's really, really key. And what they're looking to offset is their kind of residual emissions. They're unavoidable, that they can't reduce through energy consumption and things along those lines. So that's what's really, really important. Because like I said, there is a lot of talk about the integrity of the global carbon markets. When you look at Article 6, which is being heavily discussed at COP at the moment, it's around double counting and things along those lines. But we know within the UK, these trees are grown here, they're planted here, they develop here, and then they retire here. So we know that's that closed loop. So there's no opportunity for double counting, etc. And then finally, a bit about my role within the corporate partnerships team. So I create strategic environmental partnerships at scale with corporate businesses. Now, this is driven by policy. This is driven by the ESG that I mentioned earlier and the science. So it's really interesting. We have a due diligence process when we work with partners. To give you a few examples of our partnerships. So with Sainsbury's, we've been working with for over 10 years now. They've planted over 4 million trees. But what they've done is really, really interesting, is they planted with farmers in their supply chains. So introducing trees to the landscape, hedgerows to increase productivity and for the things I spoke about earlier. And also just before lockdown, we signed a £30 million deal with Lloyds Banking Group. And what that is to do is to plant 10 million trees over the next 10 years, but very much agricultural focus as well. And that there is to support their customers that bank with them to help reduce their emissions. So that's really important. And another one, which I quite like, is the DFS group. We signed with them. And that's very much around the ESG agenda and the Woodland Carbon Code and how can they reduce their emissions. So with that one, that's the business need, but they've also gone one step further and they're funding our community tree packs. So for every sofa they sell, they plant a tree, and that's a nice consumer message. And with that, it's about also changing behaviors. So through our due diligence process, we look at their supply chain, so we know that they're sourcing FSC materials. So it's really important not just to take investment for nature, but also behavior change. And then finally, from a kind of professional and personal perspective, I'm really interested into gender. So I've just finished my master's project, which is about ESG investment from the insurance sector for nature-based solutions to reduce flood risk, which fits quite well with what you do there, Rohit. Yes. Yeah, indeed. Some fascinating insight. And looking at the blended finance model, how we structure and engineer a model so that we can create ecosystem service payments. So for flood risk reduction, carbon and things along those lines. So that's a little bit about what we do.
Brilliant. Thank you for that, Daniel. And one of the real challenges we have is around small businesses in the UK. Small businesses are responsible for about 50% of the UK's carbon emissions. So one of the key things we need to do to support small businesses here in the Midlands, but also across the whole of the UK. So it's opportune that I introduce Jonathan, who is from a small business, who is working in the space of supporting the transition to net zero. But Jonathan, tell us a little bit about yourself and your company.
Thanks, Grant. Yeah, so Provisico is in the world of flood forecasting, providing actionable flood warnings to help people hopefully mitigate the loss of flood. And just to give a bit of context, in the past 40 odd years, globally flooding has cost around about $1 trillion. But due to climate change and increased urbanization, by 2050, in the next 30 years, that's due to increase to 1.7 trillion per annum. So that is just a huge increase. And what we have to remember is that this isn't a problem for other countries. It's a problem we have here in the UK. In terms of natural hazards, flood is the #1 natural hazard that we face as a country. The people of Worksop have sadly experienced that back in 2019. And so what Provisico is really focusing on is how we can help the world mitigate the majority of flood losses. Now that sounds like a massive ambition, but we know it's achievable. And the reason why I know it's achievable is because there's been countless studies done that demonstrate when you're able to provide timely and accurate flood warnings combined with flood resilience measures, you can reduce the majority of flood losses. And so that's our mission, is to get out there and make sure that we can help the world fight this problem. We have a very clear remit. I'm an entrepreneur by background, and I've been used to building commercial businesses, and this is again another commercial business, but it's a commercial business which also has a very clear statement which says we're doing this not just for the financial success, it's actually to help humanity as well, because this is something that is, as I say, it affects everybody, no matter where you come from, no matter what your income group, etc. Everybody's affected. And so for us, the more we can get out there, the more we can have that impact, the better. We come from an interesting background. Grant was mentioning about, hearing about the Woodland Trust being created back in '72. We're not quite that old, but we certainly have come from a bit of a different background, in as much that Professor Yu at Loughborough University has developed a flood model since the year 2000. And back in 2016, the Environment Agency, the Met Office, and the Cabinet Office approached the university and said, look, we know flood warnings work, and the Environment Agency does a great job in providing main river and coastal flood warnings. But when it came to surface water, the only flood warning that's provided was by the Met Office, and it's just rather coarse, and they recognised that it just wasn't the same quality and standard as the river and coastal flood warnings. And so the challenge was given to Depung, Professor Yu, and he worked with the various organisations and was able to produce the next generation of flood forecasting, which is basically a live flood forecast, bringing in real-time weather forecast, processing it through the model, to then produce every 3 hours a new flood prediction, which predicts up to 48 hours ahead, but down to an individual property level or 25-metre resolution. So really a real game changer, and particularly because of surface water, because there is this gap, as I say, in the current flood forecasting systems with surface water. And the big problem with surface water is it is now the #1 risk in the UK. And where we are is that I think the Environment Agency did their research back in 2008-9, which was sort of saying about 1 in 12 English properties was at risk of surface water flood. Aviva just came out with some stats this summer, which said that actually that is now 1 in 5. And indeed, the Environment Agency also says that actually every single place in the UK is at some risk of surface water flooding. So it's a massive problem. And just perhaps to help anybody who doesn't want to understand what surface water flooding is, it is simply the case where the volume of rain falling is greater than the ground's capacity to absorb the water. So flash flooding is an example of it, but it's not by any means the only case of surface water flooding. And often surface water flooding will take place with river flooding because it's about, again, volume of rain. So they tend to combine quite a lot as well. And, heard again about the insurance industry. And when we launched the business back in 2019, we believed that the insurance market was probably the market which would see the greatest value in what we were doing, because they were suffering major flood losses. So in the floods of 2015-16, they saw about 1.3 billion of losses from those particular floods. The floods of 2019, which majority of the losses were from South Yorkshire, that came out at just over £500 million. So these are really substantial sums. And what's been great as we've worked with the insurers is that they've realised that not only are we helping them reduce their claims, but actually it's giving them the knowledge to start to understand how they can mitigate flood loss. Because what we've been able to work with the industry is to say this point, which is if you give your clients time and accurate flood warnings, and they are able to therefore put up flood defences, take various flood resilience measures, you can reduce the majority of losses. And that's a game changer for the industry. And we've been delighted that Zurich and British Telecom were two of our early trialists who've gone public with how successful they feel that the services perform for them both. And so we're in a great position now where we've just been fortunate enough to raise a fairly substantial investment round from Foresight Group, based here locally as well. Our mission is very much to get out, say, across the rest of the world. We've got the UK covered. We've already got 30 states in the US set up. We've already modeled places like Tokyo and Japan as well. So this is something that, as I say, we're really looking forward to driving out there and really making a difference.
Great. It's great to hear. And I should say, it's not just the money from Foresight, it's also from the Midlands Engine Investment Fund.
Yes.
I've got to give it a plug.
Still your funding.
Sorry. So what I want to do is to open up the sort of panel discussion a bit and look at some of the issues that we're facing. And we know that the transition to net zero is going to be complicated. It's not easy. It's not straightforward. And there are some specific issues for specific businesses, or particularly in geographical or in certain sectors. But what I'm quite interested, bear in mind the expertise we have today, is to get your perspective on what the barriers are likely to be as we move to a net zero economy, but also what are some of the potential solutions as well. I'll start with you, Rohit.
Thank you. So with respect to small and medium enterprises, the key barrier is access to finance and managing the risks, the transition risks. So the access to finance, now the cost of capital is sometimes quite high because these institutions, these enterprises don't have the scale, and lenders often tend to look for scale. So that is a key barrier. And the second aspect is lack of, I think, coherent knowledge. They don't know which technologies are going to come. There is a lack of knowledge management. And in this instance, I think local governments, local councils, local enterprise partnerships, they can provide this missing link in terms of giving access to small businesses that want to transition out of high carbon. So does it make good business sense? Absolutely. If there is, if I draw a parallel, does it make good business sense to install CCTV cameras? Yes, it does. So in the same way, does it make business sense to transition to a low carbon business model? It does. But then there is this gap which I think universities, local enterprise partnerships, central government, there are a number of government initiatives sponsored by DEFRA, BASE, Treasury. So SMEs could use those initiatives and then plan a transition, because a transition has to be smooth. We want to avoid a cliff edge. That's
Absolutely, and I think you've touched on an important point. There's two elements to this. There's the supply of finance to make sure that businesses have the investment and the capital they need, but there's also the demand and the information gap,
yes.
which needs to be addressed as well. So I'll probably come back to that at the end if I can hand over.
Yeah, and just what Rohit said as well, in terms of me, was education around what net zero actually means. I mean, I work with a lot of companies, and you see a lot of sweeping statements out there. We're going to be carbon neutral by 2030. Or when you actually start to get under the bonnet and start to explain what it is, then they realize it's not as easy as it sounds. And for me, education is key. So it's kind of looking at, for SMEs in particular, what incremental changes they can make. But before they go and make a sweeping statement, really understand the business impacts. I think that's really key. And then also as well, kind of looking at the structural changes that they need to make. But again, planning for them, not just the cliff edge, doing it overnight. It needs to be a smooth transition. So that really is important, is education, understanding, and signposting as well, from, like you said, like bays and all these different, where they can get the support they need. So they need ESOS. Where's that available? You know, if they need a conversation with somebody about a holistic plan that does, it's not just energy but water consumption. So it's access to the information to help them kind of educate the business.
It's a good point, Daniel, and the British Business Bank recently published some research in terms of small businesses, and one of the findings was that 57% of small businesses are aware of the need to transition to net zero. So there is awareness out there. More needs to be done, but more needs to be done. But 53% are not yet ready to prioritize transition to a low carbon economy. So a lot of people are aware of it, but they're not actually ready. Jonathan, you're clearly a company who's ready and is doing it.
Yeah, I mean, it's an interesting one, because when reflecting on the question and having been in this, we're in this place where what we're doing is something which helps with the consequences of climate change. Similarly, also, if we can help people avoid the impact of a flood, so every time a house gets hit and somebody has to throw away their carpets, furniture, they all go into landfill. This is not good way to have a sustainable economy with the amount of loss that you can suffer. So we there's an impact there. But actually, as a business, we've really looked at this, and to the point about you wanted to say we're doing net zero. We feel very strongly that we are there talking about the impacts of climate change and everything else. We've got to behave as a business consistent with those values. And one of the real challenges is knowledge. Actually, the first thing for me was, well, how do we measure what we're producing right now? Where are we? And it's actually really hard to find out how to do that in a way that a small business can get their heads around. Some organizations can afford to go and pay a consultancy, thousands of pounds or whatever to go and do that. But for your average small business, that is a really important start point. Then the next thing that we faced was, we said, well, okay, so what about energy? Well, we're in offices at Loughborough University, shared offices, so we don't control who the energy suppliers are, so not much we can do about that. Then we sort of said to ourselves, well, what about buying locally? And we said, yeah, that's something we can do something about. So we've taken some steps around on that front. But actually, what we found ourselves doing is actually quite quickly moving towards, well, actually, who do we deal with, and how do we decide whether we should, say, bank with somebody who has not got a good record when it comes to their commitments to net zero and what they're doing, versus a bank who's much more attuned to that. And so we've actually looked at a lot of those supplier relationships. But again, you do sort of butt up against problems, because we are a software as a service. We operate in the cloud. If you operate in the cloud, you can't really avoid the fact that you've got all of these servers out there that are not particularly environmentally friendly. So it is a really challenging thing, and to the point which is, well, as a small business, what's your focus going to be on? For us, we're 2 years old, 2.5 years old. It's still about trying to make sure we can run fast enough to generate enough profits to keep the business going. And so it's difficult when you're faced with the challenges of what is the priority, what is going to come top on your to-do list.
I think what you said there about choosing where you spend your money, I think as the agenda kind of accelerates in years to come, that businesses and consumers are going to be more savvy of where to spend their money ethically. So I think that's everyone can do, right from your business transactions to what you buy in the supermarkets and things along those lines. That's quite key.
Absolutely, and we're seeing a number of the major financial institutions in the UK and globally sort of, flag their ESG credentials. But people want to see that translating into action. I guess that takes me on to the next point. We talked a little bit about the public sector can do this, the public sector should do that, whether it's the Environment Agency, whether it's local councils. But I'm interested in what your perspective is on the sort of the private sector role. What role can the private sector do to help support small businesses transition to net zero? I'll start with you again, Rohit.
So in this in the context of access to finance, private lenders usually look at the financial risk while deciding the cost of capital. So they could move towards assessing the climate risk and factoring that in the cost of capital considerations. So businesses which have a transition plan towards net zero, which are more resilient to physical climate risks, may attract a lower cost of capital. Hence, there is a ready and it makes financial sense, because if a lender is even if it is a mortgage, no lender would give a loan for a house that is built in a flood zone 3 without any property flood resilience measures. That would be absolutely suicidal. Lenders would not like to lend to businesses, small businesses, who do not have insurance, properties that are not insured. So these are already there. These risks are taken into consideration, albeit in a patchwork system.
Yeah.
But if lenders have this facility whereby they lend the money as well as give technical assistance, not very different from how some of the multilateral development banks operate in the model of, say, the World Bank or the European Investment Bank, or the upcoming UK Investment Bank, is the technical assistance facility, which will also monitor and evaluate the performance of a business against the financial considerations as well as the climate considerations.
Thank you. I'm going to go to Jonathan first, then I'll come back to Daniel. Jonathan, you've obviously raised finance, a mixture of public and private money. What's your thoughts on the role the private sector can play in terms of financing small businesses in transition to a net zero economy?
It's definitely a really important role that can play. In fact, part of the reason that we chose to go with Foresight was Foresight themselves have a really good track record in investing in sustainable technologies, and so that's something through the Foresight William Fund and MEIF. And so for us, it comes back to this point about people demanding it. Actually, if you as a business demand this sort of stuff, you can then start to make some change on that front. And I think that the private side is one which is I've really seen a massive increase in terms of the amount of funds that are being created around climate change and around environmental drives, etc., which is really positive. And often this combination as well of the private working with public funding as well, I think is a really interesting one. I mean, we've benefited from both Innovate UK funding, but also funding via British Business Bank combined with the private side as well. And I think there are definite opportunities going forward for there to be more joined up thinking in these areas. Because one of the things that I do always find a little bit frustrating is that you find pockets of activity going on, but there's lack of connectivity between helping people to understand the bigger picture about some of this stuff, and actually how by bringing these things together you could offer a much better solution.
Okay, I'm going to come to you, Daniel, just because you've got a slightly different perspective. Obviously, you're very successful at working with private sector organisations, but I'm interested, from the Woodland Trust, from a sort of third sector perspective rather than sort of pure business perspective, what you think the private sector could do more of or could do better?
I think the private sector needs to look across the whole of the value chain. You know, you said things in isolation. It needs to take that holistic approach. Like, for example, with supply chains. So it benefits their scope 3 emissions if their supply chains are doing the right things for their CDP measurements and things along those lines. So it's about looking at it holistically and not seeing it so much as a cost, but an investment, because that's really key. I think there's always negative connotations with cost, whereas investment, you look at the return, and I think that's quite key.
Thank you. I'm not going to ask any more questions now. I understand we have questions coming in from participants. I'm going to hand over and allow you to throw the questions at the panel.
Yeah, thank you. So the first question that actually came up had a bit of support as well. The challenge from COP26 is to mobilise finance. What is needed to bring this forward for business and community groups? I appreciate you probably touched a little bit on this. Is there anything else that you could add?
The big thing to me about the finance piece is actually about where it's used and how people think about finance now, because I think one of the key messages that I started to hear much more in recently and certainly come out of COP, and the Environment Agency led the way here. I mean, Emma Boyd at the Environment Agency said recently, adapt or die. But the word is adapt. It wasn't defend, it wasn't protect, it was adapt. And that's really where the focus needs to be going forward, to me, is about looking at the financing, about how it funds adaptation. We're not going to stop the fact that it's going to rain like hell for the next X amount of years. That's a given. You know, getting to 1.5, achieving that target, 20, fantastic, but it doesn't stop what's happening today. Climate change is with us. We're dealing with it, and we have to adapt. You know, we just can't expect to just sort of say we're going to stop it.
And Daniel, as somebody who was actually in Glasgow last week,
I think in terms of from the conservation sector perspective, I think the work that we do, land scale transformation, environmental projects, we need to get better at seeing it as job creation. So that's an investment in jobs and in people, which will benefit the climate. I think that's really, really important. And I think at the minute, it's big companies are starting to awaken with the TNFD and things along those lines, you know, about investment in nature. But it's not just nature, it's in people, because people deliver those projects, and that's really key, which then has a knock-on effect to the economy, the green economy, and also looking at innovation as well, things that you can do in terms of innovation.
I'm going to throw some headline figures. 2019 Climate Policy Initiative report says $570 billion US dollars of global climate flows, and only 30 billion of them spent in adaptation. The climate risks are going to increase. Climate adaptation financing has been traditionally in the public sector. We need to move out of that. We need to start looking at the risks of not investing, of not building resilience, and how that might impact our future. We have seen instances of insurance companies exiting markets in California and Australia because of forest fires. So insurance, yes, we can transfer the risks financially, but it's only a matter of time before they say, sorry, this is not for us. So unless we start looking at valuing the resilience and creating some revenue streams, because private sector has been not forthcoming, there are some intrinsic issues. Adaptation is a public good. Benefits are diffused. It's a non-excludable, which means that it's not really possible to build a revenue model, unlike a toll road, for example. So we need to look at some risk-based mechanisms where we can generate some marginal returns. I mean, I'm talking not much, 2 or 3% returns if we can generate over 50 or 100 years, get some of these big investments in to co-invest. Environment Agency, we have a co-investment model. We call it the partnership funding mechanism. So co-invest with the government to build resilience in the society, because ultimately, what's the point of building infrastructure that or assets that are essentially net zero if everything gets washed away in a big flood?
If I could just add two things to that. In terms of the insurance sector, the research that I've just done, one of the key things that came out of it was insurance is there to price risk, but not reduce risk. And when you look at the insurance sector in the UK, an investment in nature-based solutions will have flood alleviation and flood risk benefits, but they're not keen to do so because it doesn't fit within a metric. But it should be no regrets, really. You can't put everything into metrics. It feels like that's really key that, invested in now. And also looking at financial models and returns. I mean, we're looking at models around payments for ecosystem services. What we need is a portfolio of projects to pull together to make it big enough for investors to come in and for the return to be 3 or 4%. But you're also looking at the nature benefits for people in climate. So it's kind of how do you stack those benefits?
Absolutely. It's the wider societal benefits as well as the financial returns, which, a lot of organizations will be looking at. And just, being quite parochial, within the British Business Bank, we've taken on a new objective, which is to support the small business community transition to net zero. And certainly from a Midlands Engine perspective, we are very much focused on this agenda. We're meeting with the main banks tomorrow and other investors to look at what more can be done to support the transition in the Midlands. So it's taking the big picture, the global stuff that's happening at COP26 and saying, what does this mean for us in the Midlands and how can we support that transition and bring it to life? I think that's the critical thing. It's not just words, it's got to make a difference on the ground.
And when you look at the UK Infrastructure Bank as well,
yeah,
that really needs a natural capital mandate.
Yeah,
it's all well and good talking about pouring more cement and doing things like that, but it needs to have nature within that aligned, because otherwise it just gets washed away.
Yeah, absolutely. Next question.
Yeah, I'm going to pull a couple together here, just thinking about time. So this question asks about tree planting and things in rural landscapes, but what actually is there in terms of support for urban areas, particularly with focus on floods and pollution? And then as well, what sort of investment do you expect to see over the next 5 years with regard to flood finance and flash flooding?
Gosh, it sounds like we're going to kick off with you, Daniel, on that one, but I'm then going to hand it over to the other two panel members.
In terms of urban tree planting, it's a lot more expensive to plant trees in cities, but the benefits they provide, the shading, the cooling, things along those lines, and it's something that we need to take a holistic approach, maybe not just one city, but a group of cities together and what they can do. I know you've got Cities for Trees. I mean, the Woodland Trust is working there, but it's one of those areas where it's a lot of concrete in cities. So it's how do you find space for nature? I think that's one of the problems. That's kind of on that point there.
I should just confess here that I live in Sheffield, which has just been voted as the greenest city in the UK. Rohit, on the point about flooding and what can we do?
Yes, so again, going back to surface water flooding. So we are working with the Greater Manchester Combined Authority on something called as Ignition, where we are looking to create a revenue model based on savings on by retrofitting SUDS, sustainable urban drainage systems within, say, public buildings, and then looking at the surface water drainage charges that would have gone to United Utilities as a means. So this investor comes along, puts in some money, and then a third-party contractor builds these measures, soakways, trees to reduce the surface water attenuation, to increase the attenuation and reduce the flows, and based on the surface water charges, so that becomes a revenue.
Yes.
The stuff that would have been paid to United Utilities or the water company would then go to the investor and they make a nominal return. So we are examining such measures because, again, surface water is it's a killer for businesses. I'll come to that in a while.
Okay. Did you want to add anything, Jonathan?
Yeah, I just think that creativity is what's required here, and it's I think being one of the things that I've been really impressed with when you look around and see actually what various organizations people are doing. I mean, to the point about the insurers insure risk, and unfortunately if they don't understand that risk, they're not going to insure it. So what you find therefore is actually in Wales on Tuesday and chat with a pretty large manufacturing plant, got wiped out by flood in 2020, and what he's done is he's now put all his significant investment, 6-figure sum, into various resilience measures in his factory, non-return valves, bilge pumps, and everything else. And he now puts every year into effectively his own self-insurance fund. So he's self-insuring based upon the fact that he's taken all these measures. And just to give you a bit of an idea about how much these resilience measures can impact you. So there's the bad stat is 40% of businesses never reopen after being flooded. 40%. It is huge. So, but there is businesses there's a lovely case of a bookshop in Hebden Bridge who got closed down for 6 months when they got hit with the flood. Put in resilience measures, 2 days, they reopened. And that's one of the goals that people have is flooded on a Friday, open on a Monday. That's what's possible.
That's it. So I think we're coming to an end. If I could just ask you 30 seconds, what would be your call for action, Rohit? What do we need to do?
With regards to small and medium enterprises, from the Environment Agency perspective, we are limited by the government guidelines on partnership funding. So government priority is to protect homes over everything else. And my call to action would be for local authorities, businesses to come forward to fund, co-finance projects that are essentially part of the 60%. So 30% of the projects will always get funded. It's a majority, some of the projects that struggle to get funding. So that would be my call to action, that come together, let's invest in adaptation.
2 key drivers out of COP would be obviously to divert from fossil fuels, look at clean energy, green hydrogen, things along those lines, and invest in nature for adaptation at scale. Don't see it as a cost, see it as an investment for people, air quality, all the things that we need to survive.
Work together. It's to me, you know, we are not a solution by ourselves. In terms of flood warnings, we need people to have resilience measures. We need people to have flood plans. Similarly, what we also need is to work closer with the Environment Agency in terms of we need to work closer in terms of knowing that there are natural solutions and actually helping those people who are affected by flood to understand these things, because at the moment it's all done in a very sort of dispersed way and you know, I always feel that just pulling things together a bit more, trying to take a more holistic approach to some of this stuff will make a big difference.
Thank you ever so much. And I failed miserably as your chair because I've slightly overrun, but I just wanted to say thank you. I'm sure if we had a room of delegates, we'd all applaud. And I just want to thank people who joined virtually, and I hope you enjoyed the session. So thank you very much.